Good morning. It's Harvey Jackson. We're just going to go through the news of the day, the August 1st tariff deadline, and Canada is stuck with a 35% tariff on non-USMCA goods. So let's just have a quick look at where that might stand. I've got another graphic almost identical in a few pages here, but you can see where we stand is right in here. We're at the top end of where some of these negotiations are. Switzerland is also in a bad spot. And of course, Brazil, which isn't on here, got moved up to 50% because of some of the rhetoric around there, right? So you went from 10% to 50, and some of that's with political policies, and yet I don't know if that's going to stick. But we'll just have a look at it. A lot of them are at 15 and 19 in some of the Asian countries as well. Trump increases tariffs to Canada 35 from 25, and he cites fentanyl because that's what he can, um, basically get, to put a tariff on and protecting the country. He has to cite something. Now, either that's hey, it's for their uh, military or something else, right? So he's defending the people, and if you look at it. I think it's only 1% of the U.S. fentanyl that gets imported is from Canada. So pretty hard to say that is the cause. But anyway, so the non-USMCA goods is going to move up to 35%, and then he also slapped on a transshipment levy of 40%. So in the lumber industry, if it goes from somewhere else and then gets back, it's actually going to be a pretty hefty cost of goods, and some of those industries need some of those goods, but we'll see how that's going to play out in the U.S. Now that he's actually put a deadline on it, we'll see how much that inflation will rise, and it takes months to be able to get that data through into the economy. Um, so yeah, like I said, they excuses the fentanyl, but then you've got Premier Doug Ford saying 40% of the Canadian GDP is made up from the Ontario market, and Ford has demanded to slap a 50% counter tariff on imports of steel and aluminum, and we are the number one uh, uh, country that supplies steel and aluminum to the U.S. and they can't get their plants up and running in time. So yeah, just maybe another tariff on top of a tariff or duty on top of a duty. So more crap going on there. Um, and the Carney's sticking with it here. So uh, investors rethink the U.S. Supremacy. So the where do you put your money? Some of it's actually going into Europe and some of these other countries. So here you can see this is where the deals are made, and then all of the shifts are above there. So there hasn't been a whole lot of deals made. You've got Vietnam, Indonesia, Philippines, EU, South Korea, Japan, and these are only frameworks of deals. They're actually not uh, deals. So just keep that in mind as well. So tariff impact is overdue. Beyond tariffs, dollar status. So there's a whole question whether the supremacy of the dollar is going to be the uh, whether it can continue to hold this out. Um, and then we've got the what's kind of keeping the U.S. economy and the whole stock market alive is the likes of the tech industry. So the Googles, the Apples, the Metas, Amazon, all of them have actually had pretty strong earnings, and that's what's kind of kept everything going there.
Some game.
It's so depressing to look at the numbers. They don't lie. This isn't emotional. We actually only grew 1.4% in a decade, not per year, in the whole decade. No one has ever done that ever before to Canada. And so,
Yeah, that was Kevin Leary just in an article that he was talking about. So here, I'm going to just maybe highlight some areas. So this is your Trump coming into power, February 1st tariffs, and then your Liberation Day, and then here we are. Now, are we going to get this leg down right down to the 200-day moving average? Is very possible. I am not doubting this one. But how do you protect against that? We can go short the dollar. Technically, we should have went short the dollar as soon as we break out of this trend right here. Now, it's always easier looking back than looking at it right now too. This is kind of proving that the market is going to go down here as well, because you change the trend here, making lower lows and lower highs. Could expect the market to go down into that kind of a range. And the same thing, likewise, on the US dollar. It looks like it's going to go back up into trying to make a higher high over here. So let's just quick look at the weather. Smoke is actually maybe bothering me more than I would like to accept. And yet you've got all kinds of weather warnings down in the US here as well. Or not weather warnings, but concerns of health hazards because of smoke. So there you are right there. It was highlighted by the Nutrient website. Hey, there's going to be some storms over there, and you can maybe start to see the building on the radar that there's some there. And there's been no lack of rain makes grain scenario, and the market's still pricing in that now. Too much rain, as we all know from last year, earlier on in the spring, actually squeezes out some of that yield for sure. Here's over the weekend and going into the next week. There's still rains going across here. There's some building of fairly heavy storms in the coastline there. The European model, it's actually showing a lot more rain in the north, which could actually maybe shut off some of that wildfire smoke, but not much in the prairies. So hopefully we've got enough there before this all happens. This takes us all the way out to the 15th, so 2 weeks out. Here's your GFS. Looks like more in Calgary region, like they've been just inundated. And here, there's nothing there. Showing some rains, maybe leaning more to Manitoba than in Saskatchewan. But yeah, the models are a little bit different, but in a lot of cases the same. I think these brown dots must be where I live. There's no rain over here. I haven't seen rain for quite a long time, and this is the count of consecutive days of precipitation below a half a millimeter. So yeah, we're definitely in that area right there. And accumulated rainfall in the last 14 days, again, nothing there. But there's been a fair bit that's actually hit the southern prairies along the U.S. border. Just a quick look at the market here. Canola's down, rapeseed down even more on the front month than on the back. And so obviously trying to push in a big carry into that market. And we're also going to be finished with that month here soon enough as well. Soybean oil down like 3/4 of a penny. Crude oil is down, and wheats are down a couple cents, and the Canadian dollar down. So let's just have a look at it here. So this is the rapeseed or canola price in Canadian dollars, and you can tell the steepness of this curve, and we're chopping right at that area, trying to break out of that downward slope. And yet, when you look at the U.S. dollar one, it's not as steep, but it also only got to the 61.8 retracement value, and the Canadian one got down to the 50% retracement value on the current move. So it's just we went deeper in the Canadian dollar than we did in the U.S. Of course. Just having European canola trading in the bottom below the 23.6 retracement value, and almost looks like we might want to break this soybean oil to fill this gap here, right? And that could very well happen. Now I don't want to put any certainty on that, but your crude palm oil at some of these short-term moving averages looks like that 200-day moving averages maybe put a little bit of a cap on it as well. Soybean futures continue to trade lower. It's trying to get down to this value here by the look of it, and all your moving averages are above this, of course. Here we are with the soybean meal, and it looks like we're trying to recover to try to get our head up above that long-term trend line that took us all the way back to 2016. So a quick look at wheat, hovering right at the $6 mark on the December. Made new lower lows, of course. Where are we going to stop and take a pause here? Now, end of the month, going into new month, you can see reinvestment of monies going into some of these commodities as well, so keep that in mind as well. Kansas, all moving averages are above where it's currently trading, trying to make new lows, and Chicago is definitely making new lows. And yet the corn is looking like it's trying to get ahead at some of those short-term moving averages, bouncing off of the low for the December futures. Live cattle pulled back yesterday as well, and same thing with the feeders. So some are saying that could be a correction. It's hard to say. There were some reports that came out that was citing just the price across the U.S. of just ground hamburger, and that price is greater than the price or the average price of or average hourly wage on the minimum wage So that might be what's significant there. Have a good weekend.